The dollar is sliding as U.S. Iran ceasefire hopes unwind safe haven demand. The move is not a straight collapse. Oil prices and renewed Fed rate expectations are keeping the greenback inside a range. Dollar slides Iran is the hook because the confirmed event creates a specific pressure point. The supply data shows the dollar index down roughly 1.8% in April, on track for its steepest monthly drop since June 2025. The measurable anchor is 1.8% April drop, and the story turns on safe haven fade rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this. The pullback followed a ceasefire agreement that reduced war premium positioning and cooled demand for crisis hedges. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, US dollar and DXY sit inside a process where Fed bets can change the readout. The baseline also defines the boundary. 1.8% April drop is usable evidence, while anything beyond Fed bets still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where dollar slides Iran becomes useful. A softer dollar can loosen financial conditions, but higher oil and future rate hike bets can slow that effect. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is oil rebound, which is why 1.8% April drop is a signal rather than decoration. That is why the segment spends time on oil rebound before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. Crypto traders care because dollar weakness often supports risk appetite, while renewed geopolitical stress can quickly revive haven demand. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to DXY and US dollar, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. The ceasefire path is not guaranteed, and the dollar's range depends on oil, Fed expectations, and regional risk. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is whether peace talks hold and whether Treasury yields keep supporting the dollar after the April slide. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need US dollar or relevant market participants to show follow-through around Fed bets, not only reaction around DXY. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for dollar slides Iran is concrete. The next signal is whether peace talks hold and whether Treasury yields keep supporting the dollar after the April slide. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect 1.8% April drop to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to 1.8% April drop, safe haven fade, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.